Greetings, market rebels. Welcome to this week's macro measure. I'm Wayne. My partner Ryan's wrapping up our market outlook for the week. It'll be heading out later today. Just going to flash our trusty disclaimer here, and then we will flash our trusty intellectual property rights notice. And that should do it, I think, right there. So moving on, let's get the right stuff up here. I think I've got, let me get the right, I think I'm going to just switch my share over to screen 4 share. All right, I think I've got it down. So that should be doing it there on double check. It's got screen 4. Okay, good. Doesn't look right for some reason, but hopefully it is. Anyway, welcome to this week's macro measure. Last week, I'd like to just hit on what we talked about last week. And last week we came in and I was more about jump ball kind of at the early part of the week. And then, wait until the market shows you something to do something. So this was the prior Friday, since we only had a 4-day week, and we were waiting for a low to break down or a high to be taken out. Really, we were looking at the SPY, so I'll switch to that. But there's a reason I started out with diamonds. But so here's that prior Friday in the SPY, and then we start out here in Monday, I should say, and then here's your holiday shortened week. And the plan, I think, worked out okay, where wait for this to start taking something out and then go with it. And I think more or less we were thinking that give the bulls the benefit of the doubt. Still, we've been giving the bulls the benefit of the doubt for a while now, and it's definitely paid off to respect that. And this has gotten, the reason I had diamonds up is because this has gotten, I think, a little bit overdone. Let's see if I can get the reading right now is 72 on my RSI on the daily. So I looked around at a lot of the sectors already. There's just been a lot of things that are, I think, getting stale, which I'll talk about more in the sector situation, but things that are just at 72, 73-ish range on the RSI doesn't mean, imminent doom. It's just overdone. I'm looking at the market this week thinking there's no doubt we know who's been in control of the market. So let's give ourselves a little bit more of a view. We've been talking about this for some time. The bulls have, especially in the Dow, the diamonds have done extremely well, and they've gotten through even this high here on a closing basis too. So they were able to do some pretty amazing stuff, not outside of the upper Bollinger Band yet there in red, but definitely, I think, elevated with the 72-ish reading on the RSI right now. So that to me is a little concerning. I think if you look at this as maybe like a flat line area, let's call it at 340, we'll call it about 342, 341, 342. I would say, look, this probably needs to pull back a little bit. That's not very much, but this probably needs to pull back a little bit. And really, even a 1% pullback puts you below that flat line that I think is somewhere around 341, 342. So only a 1% pullback would break that. And that probably takes you down to this 10 here in white, if that, or another flat line that might be nearby. But basically, we could just say that a little bit of a pullback, maybe 1.5% to 2%. Now, that would be fine, I think, if you're a bull, that you get this little bit of a pullback and then you try to go again. What if it doesn't stop there, though? That's the big problem. That's where I think this support line is that I just made blue. That's the problem, is that you lose that support, excuse me, and then you might come all the way back down towards the 20 there in blue. So not in another week where I don't think there's an easy juncture for us because of the way things ended up. I think a lot of things, and just to flash a sector or two, let's do XLY, just to flash a sector or two and how they ended up. This is one that is really lagging still, that is not really overbought at this stage. And to me, if they get this going, this could really be a big deal. If they somehow get discretionary going, that would be a sign that they're really trying to shake off this. It seems like incoming slowdown or recession, or that we've had, or that we will have even more of. So that is a big one to keep an eye on for, I think, in the future, to see if that thing starts to go. Now, on the flip side of that, here's something that's already gone, which we've been talking about. And I know we're a little bit sectory here, but the reason I'm saying this is, and highlighting this, is because these things are just overdone at this point, and they've had a phenomenal run. So I think you have to expect a somewhat of a pullback soon, and then see how that works, right? Does it find support where we think it should, or nearby there at the very least, right? So if we take a line here, we work it up here, this would be pretty close probably to a resistance, a support line that I would draw. That doesn't leave a lot of room for error. This is why I'm saying that probably come back to a flat line, probably come back to your SMAs, because this is pretty steep and it's been going for some time, and you're getting extended, right? No matter how you look at it, you're getting extended. And it's tough to say with the loss of volume, is that a great telltale sign? Because we were dealing with the holidays, and a shortened session, a session that was probably light on Wednesday, just for folks traveling, and then of course off on Thursday. So this is what I'm referring to when I say these are getting a little bit stale. That's really up there. It's at 72 on the RSI, excuse me, on the XLI. But let's get into just a quick view of this. I think I have to pull this over for us now that we switch screens. But right here, just wanted to show what we've been including in Market Outlook recently. And this really has to do with the seasonality. And you can see this, these are the trading days of the year. And so, excuse me, we're coming into the tail end on these, the last few trading, I'm sorry, not year, month, last few trading days of the month for November. And this is what we typically see, which we did see mostly, I think, a little bit, an attempt to take things a little bit higher last week as we were working our way towards the end of the month. And you could see that things kind of generally end up, regardless, right, what you're looking at, things generally end up pretty solidly overall at the end of the month. So that's one little seasonality view there. Another one, which we've shown before, is that you, in most years, these midterm years, in most years, you probably get a nice little finish into November, and then December tends to be pretty good as well. So that seasonality, which has, I think, been winning out so far, but that seasonality is what we're looking at. And they've done an incredible job of shaking off, I think, a lot of the reality that's out of there. I'm sorry, not out of there, out there at the moment. And just to kind of highlight where we are on some of the percent of stocks above the 200, et cetera, you can see right there that we actually have another new high that gets made at the end of last week. If we switch over to the MM20, MMTW, that's hanging in there towards the higher levels. But a little bit of an early week stuff might have hurt it, that we had a little bit of a pullback. And then just to look at another one, 50. So here's the MMFI, and that's up there too. So basically 2 of the 3 are very close to the most recent high, and then the 20 is maybe working its way back up. So as you all know, there's a lot of information that'll be coming out this week. Just keep an eye on Fed talks, right? Of course, there's the Wednesday is a pretty big day, the last day of the month. There's Powell, supposedly, Beige Book, Cook, Bowman. There's employment reports. There's all kinds of stuff going on. And then the following day, we have a lot going on in terms of jobless claims, price indexes, more Fed, PMI, the whole works. So this could be very interesting. And at the start of the final month of the year, I think there could be some apprehension in front of that. It might make sense for some profit taking to show up. after the kind of move that we saw. But getting back to the charts, this is what we're really after. And if you look at the major index ETFs, they're all still still in really bull hands, right? But I do think that they're losing a little bit of their momentum right now. If you're a bull and this is what you get in terms of corrective phase, you have to be happy, right? That you have this big push and then you pull back a little bit, sideways a little bit, and then you start working back up again. But this is the hard part about holidays. We talked about it a lot lately, but do we trust that as a real development that you made a new closing high, or do we look at it more so as that was a bunch of shenanigans around a holiday, which was thinly traded, but really close to the 200 there in purple. We've been waiting for some time for this to get up here, but 200's actually come down to sort of meet up with where the price is, and price is having a really difficult time working its way through, call it 403 convincingly. So, which is kind of a level, I mean, we've talked about. So it is what it is. Right now, though, I'm looking at it saying, I still think if I go back to diamonds, we'll see that on my counter that there's been 5, oops, I don't know how I got Devon out of DIA, but I did. DIA. This has been in bull control now for 5 sessions. Not as long on the other major index ETFs, but the bulls have had control here for a while. I do think that it looks relatively healthy, but we have to start being concerned about it, and just in the short term with the 72 RSI here. So I think you're really, again, at a messier stage where some things are out ahead, some things are not moving that much. We were affected, I think, by the holiday. Here's IWM. I mean, right now the bulls have had control for a few sessions, and it wouldn't take much to keep it going, right? But what will they? What will they do that? And I got to say, right now, I don't see a lot of things that are freshly bullish there yet. I think you just wait right now again, and if you see highs getting taken out, that you could be on your way back to a challenge of that. And let's face it, we are in an intermediate term uptrend in there. If that's the way that this has been working, I'm just not really loving a lot of the price action versus the RSI right now, because some of these things are flashing a little bit negatively, where they just couldn't do that much work last week. So the Qs is one I'm talking about, where not even close to the highs, that couldn't get back up there despite what the diamonds did, what the spiders did, and the Qs were lagging there. They're still hanging in there though, right? They still are above the 10-day there in white. They're still, if you're a bull and you look at it, you've got higher highs and higher lows. You've had a nice little consolidation that's basically did the old sideways thing now for a while, which is good to take some of the overboughtness out of it and let things back off and build from maybe this little mini base here. But what's going to start that? And that's the next kind of part of our journey, which is that a lot of these bigger stocks, which I made the point last week, a lot of them haven't really gotten going yet. So if we look at Amazon, if it can get above the 10 and 20 there, that could start to do something, right? Again, this is probably a little more discretionary type stuff. Apple, another obviously huge name that's been struggling, right? This is mired in this here. It's almost sort of diamond-esque, where that doesn't look all that great. So you can't be thrilled about it right now, but we know this stock has on news can change its course quickly and help change the market's course quickly. So not in love with that at the moment, but just remember, if they get a lot of these things going, imagine what the indices will do at that point, because look what they've been able to do without having a lot of these big names really roaring, right? Microsoft closed at a new high, recent high here. So that could start to potentially participate. I'm not in love with that. The bulls have had it for 5 sessions and haven't done all that much with it. They've done okay, but it's not like that thing's really rocketed. And I think you could see the volume tailing off there. you could see that it's just nothing special. This is not what I would say is a great setup right now. I think you have to wait in a lot of these things. Again, you've got to wait for your support lines to get taken out. And even with that, you would have the 10-day there in white if that line gets taken out. And then by the same token, right, we could put a nice little horizontal line up here, flat line up somewhere, kind of splitting the difference, trying to get a good fit on that. Probably somewhere just around there would be okay. And you can see that if that gets through there, you leave this triangle and maybe you extend further and so on and so forth, but not as if you're at a great juncture yet. You need to wait and see what happens. And I do think there's some overboughtness in some of these sectors. So not in tech necessarily, but in other sectors. This would normally look pretty good, right? If you get a nice burst like this, a nice pullback, and then you start going above the 10, above the 50 in white and yellow respectively, you draw a nice little resistance line across the top here, something like that maybe. And then you start to go, and then you have a gap here. You would think, well, this Google looks primed to go. This looks pretty good. And but it hasn't done it yet, and you would need to take out this high on a closing basis, 98.85. So in my book, at least. So keep an eye on that one, though. I do think if you do have a bullish market in tech this week, then that one certainly seems like it's there. Visa, this has been going gangbusters, which is interesting. But if you like that, that's great, right? That seems good. The consumers are doing their thing, but we keep hearing that more and more of this is basically on staples, right? We're more and more on staples. So let's take a look at other big weights. And this worked its way up. Berkshire worked its way up. So there's that, right? But is it overdone now? I mean, I would say it's definitely looking overdone to me. Outside of Bollinger Bands, above 71 on the RSI, been in control of bulls for a while. They've had their hands on it and have been taking it up. And I would do this right here. And then you get a little bit of a pullback, but these are just counter trend trades. And unless you really think that the whole price structure is about to give way, that would take a lot to fall basically down. You'd be looking at a nice $9 drop, something like that, even to get to where the support really becomes an issue. So that is equivalent to something like this over here in my book, where you lose, there you go, and you lose that kind of support, and then you finally can get some more downside, bigger downside. But yeah, I don't see a lot there. So these things to me are, I guess if we had to summarize it, I would say that these things are probably, a lot of things are maybe short-term overbought and due for a little bit of a breather. And as long as they keep it healthy, a healthy breather, then I'd stick with the seasonality and the fact that the bulls are in control. The VIX is also effectively confirming that who's been in control. And this thing, we said, we've been looking at this for pretty much all year, and we said if it can't hold up in here, it probably works its way towards the lower part of our channel that it's been in, and that's what it's doing right now. So it is what it is there. If we take a look at another area that I said I was concerned about, it was what's happening with crude and how is it possible, right? Crude really finished the week pretty roughly. And how's it possible, right, for XLE, which has been a big leader, how's it possible for that to continue on its merry way higher with crude continuing to trend lower, lower, lower? That's still where I'm at. But this news, they use that Saudi news to def perfection, right, to create this major reversal. Now you're maybe back in jeopardy if you can't hold out above that 20 SMA there. And that's just 91.49, just call it 91-ish for now. So because I've got the switcheroo happening here on me, but come on. Uh-oh. I hope Thinkorswim is not freezing up on me here. it kind of did freeze up on me there. That was a little scary. Don't want that to happen. But overall, the VIX just hasn't found a bid. The energy looks vulnerable to me because of that situation we just saw there in oil futures. And then let's look at, we've been checking out lumber just to be thorough, but due to the housing situation, because somehow they managed to levitate that stuff too. And here we are looking at random length January 2023 futures, and they're working their way back down, which again, this is one thing I say every week that actually makes sense to me. I don't really know if this is the best future. It's not my market, but I'm pulling the chart just saying, no, that's not looking great. And that makes sense, right? So between that and then oil doing what it's doing, and then let's take a look at copper doing what it's doing, which the last time we checked was nothing special. That almost looks like it's ready to lose the support that's there. A little bit of weakness could create more selling in that thing, that you would have maybe another leg lower. So a lot of the things we look for are not that great. So I'm looking at it really overall this week with more of a, you know what, it's been a great run. I'm not saying it's over, but these things, a lot of sectors are due to take a little bit of a breather. Some of the major index ETFs could also use a little breather, mainly the diamonds. That one could use a breather. The other ones aren't so bad for sure. So maybe, right, some of the big names that we're talking about in tech, the Amazons, the Apples, the Googles, the Microsofts, maybe they'll start to get that bid. Maybe people will say, you know what, this stuff hasn't really ran. And that might be an area that they shift into. So I'm not really predicting that. I'm just saying that some of those are kind of beaten down, and we all know they would really help due to their weights. They would really help the index ETFs. So I would say, look, as long as those are in trouble, right? If they're not doing very much, I think at this point it's going to get harder and harder for the gang to move these major index ETFs up, because they've moved them up so much. I don't see anything really good economically that's appearing, right, with what we looked at in lumber, oil, etc. I don't see anything special there that's happening. I don't think the global macro I've read isn't anything special. So that sort of makes sense. And so I don't know what keeps this going other than just the pain trade, so on and so forth. Oh, and I wanted to note, I think that oil trade is crowded on the bull side. So if that does finally break, I do think there could be some opportunity there where a lot of people are just on the wrong side of that boat and things tip. So just diverging to there for a second. But yeah, I think it's really hard to say. I mean, I don't see anything great like where the big tech names are primed to go. I think Mike, well, sorry, I have this keyboard problem. I think Google, as we noted, looks pretty good in terms of how it could break out and the gap to fill and so on, so forth. I think that looks pretty good. Microsoft doesn't look terrible. That actually is looking okay with sort of like triangle if it can break out. Again, it's been a little bit stale maybe at this point, right? That bulls have had it for a while. But again, it's hard to really read these things as you normally would with the same level of confidence that you would with when you've got these holiday sessions. Again, wait for that 10-day to get taken out. Amazon, that's at 95.75. So that would need to work its way up about 3% or more just to get started. But if it gets through 96, I mean, that could be the start of a little bit more in there. So there's a mixed bag, even in some of these bigger names, there's a mixed bag, which again, I think we're not in. I think we're in for a week that's you got the news that really starts to ramp up on Wednesday and Thursday, especially. You've got the end of a month, the start of a new one. I don't see anything that's pound the table right now. Let's go. I just don't see it where I can't wait to start buying calls on Monday morning. You know, bar the door, just start buying calls right now. I don't care. I don't care to do that at this juncture. Now we will have. I think it's another one where if you're opportunistic, You get a couple little short-term things going for yourself, great, and you wait and see how this plays out. Because, for example, semis, which are important, I would want them to get above the 200 at this point in purple. And if they're not going to hold this support line, which should be a support line in the 10-day there in white, which is at 220, really right below here, then I'm thinking they're dropping back down to that rust-colored 150 right there, a little bit lower. And that would be a big deal. So basically it comes back to, do things peter out at levels where they petered out before? And that's why we've got some of these lines in here. And do we get that same kind of petering out where they've done a lot to this point, kind of in the face of maybe a lot of logic? And now that you're back up towards the 200, towards the downtrend line, the resistance line, do you just run out of gas here and that's it? And then start rolling over again? That would go against the seasonality, right? But it's certainly possible, right? That and of course, if there's news that this global macro, whatever the case may be, that would be a big deal if something were to turn this market over. It's news driven, but really you're just at a tough spot again, and that's all there is to it. And I think you have to be short-term opportunistic and wait to see more on the bigger picture. And I think that kind of approach probably served you well last week, and I think it's going to serve you well this week, right? There's some of the big things like the dollar. This has been getting smashed pretty hard. This has probably got a little bit of positive divergence right now on some of the oscillator readings versus this low over here. But certainly, right, it would be aggressive just to start buying here. You haven't taken out any form of resistance at all. So again, this is probably in seller control until proven otherwise. And so that's been good for the markets. And TNX too has also come off and just not really regained its form. And we know that these had tremendous runs. And there's nothing, this is nothing we're shocked by, because we talked about how big picture those were getting overbought on every time frame. This was months, maybe like six weeks to a month ago, I would ballpark, is when we started talking, maybe 2 months ago. But whatever the case may be, right, this is not something where I'm dying to start buying, right? I'm dying to start buying when say something like this is happening, where you go into you had a nice run, go into a consolidation, and you break above it again. You break out above it and you're in an uptrend. Right now, we know we're not in short-term uptrend or an intermediate-term uptrend. So I'm not nearly as aggressive as a buyer, right, when this complexion is in place, as I would be when there's a better complexion over here with rising SMAs, so on and so forth. So those two things we've been noting pretty much all year, that when they've been either helping or hurting the market inversely. And so that's where I still am. They don't seem like they're ready to do anything yet. I would keep an eye on them. I would keep an eye on your big names that we talked about. And if they start to get those going, that might be the kind of juice that's needed to really go into that melt up phase where they close gaps and maybe even flirt with taking out critical highs that would maybe have us questioning if the bear market is still intact the way we thought it was. So for now, I'm still a long-term bear. Short-term, probably a little more neutral. In the end, if I had to force it, I'm bullish, right? I'm going to stick with being a bull because overall, but not really to start the week, just because I feel like there's a little bit of overdoneness out there. And I think it would be better for bulls if they back things off and mildly, and then got their mojo to use that on Wednesday and Thursday of the week when some of that news is made, and maybe confirms all their optimistic takes that they've got going right now. But that would be it for now. And of course, if anything dramatic is said, that could all change the market. And certainly, right, with Powell and other Fed speakers due this week, and some of the reports that are due out, you certainly could have that in the second half of the week where maybe they use any negative comments to take profits, right? You see some early profit takers say, it's been a great run. Now that he said this again, I'm out. That was a nice little trade for the last month and a half or 2 months. but I'm done now. So that's what I would look towards. So again, same old thing, same as last week, really, just a little bit different, and just be smart, right? There's still opportunity out there day to day. You just got to be smart about getting singles and doubles for now until we get into a market that's on more better short footing. So hope something I've shared with you helps you out this week and in the future. Thanks for tuning in. Still recovering from COVID, so doing the best I can, just not fully out of the woods yet, unfortunately. So I'll see you all during the week. Thank you.